folks, Eric Mashinsky, Gold Investment Letter, July 12th on Tuesday, and I'm going to give just some brief thoughts on the markets in a video format, and then I have some writing that I've got partially done for new blog posts that are going to talk a little bit about, and also for private emails to premium and elite members. Dealing a little bit more directly with some data points and things on the economy and things that I find of interest. I have been pretty on top of really following what needs to be followed to try to keep a finger on the pulse of these markets as best as possible. There was a period there, obviously, where I was completely out of commission. But, I've got plenty of resources that are world class that I dip into on a regular basis for cutting through the clutter and getting down to the nitty gritty of economic prognostication, which is not easy, admittedly, especially when you're dealing with a macro scenario. But I like to keep it pretty simple because I think that is where the keys lie to making money going forward. And what I want to preface this with is that I think the current situation and market status in the precious metals and miners is one of, if not the most attractive opportunities I've ever seen in my life. These junior mining stocks, producers too, the multiples that are on these things right now are utterly ridiculous, and they will not last. They may get worse before they get better, but they will get better because, and especially with the junior miners, there's no activity. This market has been bombed out, it seems, already. I don't know how much lower you could watch these plays go that have substantial assets and or are in the middle of a discovery. And normally in a performance curve for junior mining companies and mining producers, we've all seen the curving slope of big returns in the early stage, from the early stage of a discovery, and investing during that time as that discovery gets proven, and then the lull that occurs as a company starts to do what they need to do to potentially build a mine. And then building a mine, that's very expensive, and the performance tends to lag. And then you get the third part that goes, and it's driven more by earnings once a mine is in actual production. I'm seeing at any phase, this stuff is suppressed. It is utterly ridiculous in terms of valuations across the board. I look at anything from, whether it's, you look at like nickel and copper companies. We had sort of a hot market there for a while. Look, nickel's still at $10 a pound. Where was it 24 months ago, 12 months ago? The nickel has never seen the levels that it saw. It had a short squeeze, the market got turned upside down, and it printed in the 20s. We knew that wasn't going to last. I also don't think under 10 is going to last all that long for nickel. But even at $10 nickel, $9 nickel, $11 nickel, some of these plays, you look at like a Giga, you look at a bunch of these, nickel companies that have substantial nickel assets, but there's not many of them. There are very, very few that actually can boast about spending the last 2 decades finding and proving up a viable potential nickel deposit that turns into a mine to supplies a metal that is going to be in high demand for the next century, and is really going to be hitting in a crux in around 2024. And I think that we will see even into next year, we're going to see anticipation on a lot of these commodities where, just to supply the electric vehicle adoption curve. I remember looking at a lot of these PowerPoints of, when we started to trade lithium companies or cobalt companies like Canada Cobalt or whatever back in the day. This is going back probably 4 years ago that we started to get early plays. Look at even First Vanadium which is now Phenom Resources, to play that vanadium boom. Was, we funded that thing initially in November of 2017. We made a tremendous amount of money from 14 cents to $2 within 12 months. It went there twice within 10 months. And so that's when the critical metals, quote unquote, the critical specialty metals, battery metals, started to make these moves. And I remember distinctly seeing that, the adoption of the electric vehicle and the battery metal curve making its way up, still very nascent and early back in 18, 19, 20, and even today. But getting into a point where we are crossing a threshold where the demand for the metals and the supply of the metals hits a crux. And we're not far from that. What does that mean to me? Take your inflation, deflation, stagflation talk and chuck it out the window. It doesn't matter. There are going to be pressures that are on these are tailwinds for the commodity prices. Now, if inflation continues, we saw probably some of these commodities make those moves because markets make moves prior to when we see things materialize. There is a third eye to the markets that sees out into the future, 6, 9, 12 months. Usually I think that the market is somewhere, I've always thought, in my sense, it's like a 9-month-ish, give or take 3 months, prognosticator of the future. And I don't know if that's right. You could call it 18 months. You could call it, 3 to 6 months. I don't know, but it does look forward. And that's why we saw, I think, that big pop in a lot of the commodities prices, which was implying that the inflation numbers were going to start to print higher, which they have. How long does that go on? I think that it's easy for us to see that, the herd and everything is sort of flipped over to now inflation is going to be high forever. It's going to climb and we're going to have serious problems into 2023 on inflation. I don't know about that. I really don't. I really am uncertain as to, I'm not banking on these 8% plus prints on inflation numbers in the CPI and things like that here in the US. We probably see another print this month. I think it's tomorrow. That's going to be aggressive. We probably see one more for sure in August. But after that, I don't know if we're going to see maybe a little bit. All you need is a pause in this stuff that can be justified by the Fed to all of a sudden stop their tightening, which has been a pathetic attempt at quantitative tightening that we've seen. They've gone very, very low underneath their goal of what they've said they were going to do in terms of tapering off and selling off some of the balance sheet in the early part of the summer. But the Fed and all of these economies around the world that are based on a fiat central banking system format, the debt levels are they're too far gone. They're gone. And now we also have we have midterm elections here in the US coming up in the fall. I think if things are going to get cranked down, the biggest part of the risk remains through the summer into what is typically, if you want to see the worst performing month in stock markets, it's actually not October, it's September. From a seasonal standpoint or from an annual standpoint, October's had the biggest crashes, which you have to be mindful of as well. But September's actually the worst month historically in terms of when the market can really get pounded and have retracements. And so the sell in May and go away philosophy, which I had mentioned in a video back in May, that could be very, very wise this year, is just to go hang out with your family, go get some exercise, get some vitamin D and some sun, and come back, towards the end of the summer and start going shopping and looking at the markets again, because we just don't have any action. We don't have any action in the mining stocks, whether there's good news that comes out or not. These things don't have a pulse. The good news is it looks like they're bombed out, because we're not seeing additional big sellers. The thing is it doesn't take much selling or buying to drive these stocks up or down, because for the most part, and you're certainly seeing another phase with some companies that might have been a little bit overpriced and have not seen a waft of selling that can get cranked down, another 20 or 30% just based on one shareholder that decides they want to raise some cash. So that is out there. And I think that that's where it makes a lot of sense, guys. You want to have, what we would call stink bids. If you have cash, you want to have stink bids in some of these different stocks. Some of them, like I have a wire that is going to be hitting my account today from a crypto investment that I had made years ago, and it still was way off the highs, but back in when I had my medical stuff going on and a big medical bill and a lot of other stuff going on, and seeing that things were going to get cheaper because of the cycle, and I'll get back to that in a second, but the Fed cycle of tightening, tends to really put a damper on speculation across all asset classes. And that's why talking about inflation, some of those numbers just started to peter off where they can either go ahead and pause and or then lead into a reversal. They're going to have to do that eventually. I'm not so sure it's going to happen in the next few months. I think if I had to be a betting man, I would say that, they're going to need to keep focused on this inflation problem and continue to raise rates for the next couple of months pretty aggressively. But then I think anything can happen, going into September, October, November, into the elections, into the time frame of year when, things can get kind of ugly and are more susceptible to crashes and things of that nature. They may, if things get washed out enough, reverse course. And you want to be ahead of that. And that can really see some of these companies, I don't even think if we do get that reversal of course, we're going to see a better structure for gold and silver and commodity mining stocks. They're just too cheap. They are so cheap from what I have ever been able to deduce without even getting into the data points and the PEs and everything else. Cost, the valuation per ounce of this in the ground or that in the ground. But in any event, I kind of tailed off there. But the wire that I'm getting, I took off like a third to a half. It ended up being, it was like under a half, but over a third of a position that I had in a crypto fund that, was way off of the highs from last November, but was still up like 5x or something, 6x, something like that from when I started putting money in. And this was when, Bitcoin was still in the 30,000s, like the low 30,000s, maybe right when it first cracked down below 35. And I wanted to protect some of those gains, but also to have a war chest for shopping this summer. And that's exactly what I'm going to be doing. Right after this video is recorded and sent out, I'm going to be looking to see if that hit my account before the close so that I can go and buy some of my favorite stocks because I will be taking a big slug of that and allocating those funds towards going shopping for long-term bargains in the mining sector, which is the most attractive arena in the markets right now. And for risk reward in any markets, any different opportunities, these bad boys are just, they're there for the taking. The question is not if, but when you start to see a better environment and a more realistic environment valuing these companies for what they actually have. And I don't know. We could see things perk up in gold and silver any day. Some of these companies are so bombed out, they're not even trading anymore. They're trading barely, 10 grand a day. I've been buying up stocks for the last few months or more that have less than $4 million market caps. There's like half a dozen of these things that have real assets, real gold or silver discoveries, multiple properties that are trading for nothing. There's even, there's one of them I'm going to be re-looking at before I recommend it to some of you in premium and elite that, this deal, it's trading at cash and they have like 4 properties that are viable and they're trading at cash, like $3 million market cap. It's ridiculous, but this is beautiful if you have any money to spend. So my relay of information is that it is absolutely time to be in a bit of a, just paced shopping mode. You want to be a buyer in this market. You do not want to be a seller in the mining sector in this environment this summer. You just don't. If you are overextended or something, you got to work around that. But you don't want to be giving up things here. And you do if you have cash and you have profits elsewhere or, things of that nature. I don't think you want to be selling. I feel the same way about crypto, frankly, even though there is a good risk that we see a flush even lower, but not certain. I mean, in fact, I think right now you've got Bitcoin at like 19,600. It's the third higher low and higher high on the chart on a shorter term daily chart, which to me looks like a great entry point where you could potentially see this bounce towards the like around 25,000. So you're talking about 30% or so upside from this level, 27 to 30% upside before you see the top of the channel that would be met on a breakout that would be subtly indicated by these higher lows and higher highs. And you could buy it here and keep you could keep a 3, 4, 5% stop limit loss. And if it ends up breaking below that trend line on the third low, sorry, I don't have the charts up here yet, but I will go through this actually if I have time even tonight to do this with this trade for Bitcoin. But, so if it breaks down below that trend line and the 3 higher lows, you just get out and you cut it. And I think that that's probably like around, I don't know, 19,000, 19,200. I'd have to take another look, but buying it right here, risking 3, 4%, call it 3, 4%, 5% maximum to make 25 to 30 is a pretty darn good risk reward on crypto if you're looking at potentially doing any swing trading. Longer term, I still feel the same way I've always felt about crypto in the sense that, this is a core asset that you want to have, you want to be an accumulator of, and you don't want to touch it. Your long-term holdings shouldn't be touched. They should just be socked away. I have my auto purchasing back on since we cracked down here into the like low, even in the 20s, I turned it back on, even the higher 20s. It's the modest accumulation, $500 a month in this account, $700 every 2 weeks in this account. Boom, 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 boom. I'm socking away Ethereum and Bitcoin for my longer term portfolios. And, I can afford to do that, because I had taken some massive profits in 2021 from some of these altcoins and even from Bitcoin and Ethereum on some of the swing trades and everything. I have a negative cost basis on everything I own in crypto, meaning I've already taken everything I've ever put into it out of it. And I still have a lot of money in crypto. It's back to like where, with this big crash in crypto, and I've been adding a lot to my metals and mining positions since last, May, I think, not this May, last May, when I would have those big moves and then I would start to accumulate physical gold as well. But, look, there's a lot of shit that goes on in this space that's crazy. I mean, I've got probably close to $1 million exposed at Celsius Network, which looks like they may be insolvent. I might lose all that money. And the biggest position I had there was Pax Gold, probably $400,000 or more worth of Pax Gold, which is like a gold ETF, but it's in crypto. Pax Gold hasn't done anything wrong. It's Celsius, the lender, that was paying me 5.5% for staking my Pax Gold that they over-levered. And now they're dealing with creditors and restructuring. We've seen this across that space, but those are the environments you want to be a buyer in, not a seller. People and Three Arrows Capital, this is like the long-term management deal back in 1998 before we had the biggest rip in stock market history going into 2000 in tech. You could have bought stuff for nothing if you would have bought into what looked like an absolute disaster until the government stepped in and backstopped long-term capital. Now, the feds are not going to come in and rescue crypto, but crypto's rescuing crypto. It's actually working out very well in terms of the mechanics of the structure of the system. I'm fine with it. And it's working through these excesses, and it's going to lead to the next bull run in cryptocurrency. That might not even start for a year, but or 18 months or 6 months. But when it does, crypto's going a lot higher again, folks. It's not going anywhere. And I use Bitcoin as it's not a store of value. Gold is a store of value. Gold is the safest place for my money in the world. Okay. But I want returns. I want big returns, and I like big returns. And I think you do too. So, that's where the actual Bitcoin comes in. There's a whole slew of reasons I'm not going to get into that I think makes Bitcoin more viable than ever. We'll talk about that later. Gold is not dead. Gold is here to stay as well. And it's a mistake that the crypto community has made by already comparing Bitcoin to gold as a store of value, when the fact of the matter is, since 1971, we're going on next month, it's going to be 51 years post Nixon taking us off the gold standard. Okay. Gold is up it's between 9.5% and 10%, depending on where you want to put gold. If gold's at 1800, 1750, 1850, call it 9.2 to 9.7 to 10% annualized returns against the dollar. And you might see a gold go down in a 1 to 2 or 3 year period against the dollar, but not much longer than that. You're always back to par within a few years or less. I mean, the same thing you could say about Bitcoin outperforming everything. As long as you give it longer than a 2-year time horizon, it's crushed everything. If you priced the S&P gain and the move in the S&P since 2009, when Bitcoin was invented, if you price it in Bitcoin, it's down 98%. So it's all relative, folks. But the fact is that gold maintains that buying power. Now, I have a lot of extra gold that I was buying after selling crypto tokens for 150, 250x my money and saying, holy shit, this isn't going to happen again. I had 8 of them that were over 125x returns on partial profit bookings, not my whole position, but partial profit bookings in 2021, that I said, this time I'm not going to be stupid and put it back into some other crazy crypto token. I'm going to move it off of these exchanges and I'm going to put it into gold or cash or real estate. And I did that steadily. I didn't worry about where's the top, where's the bottom. It's a loser's game. But in any event, same thing here. Gold is not meant to skyrocket. It could, and it will at times. It will be very aggressively a mover. But the most important point is it's going to hold that value. And then on the downside, look at what's happened with gold versus Bitcoin or the S&P. Any stocks, any sectors in the course of the last 6 months, I would rather have my physical gold. Now, what's better than that? Dollars. That's obviously been a place where you want cash, you want to sit on cash, but the cash is still losing, at least at this point, and these are only if the numbers are correct, which they're not. They're still slated 8% a year in US dollars is what you're losing in purchasing power when you're printing 8% inflation. So I still love my gold. I love my silver is actually getting really ridiculous in terms of where this is getting priced. And some of these mining stocks are so attractive. I'll leave you with this. Phenom Resources, you're going to see some updates coming from me to reiterate what actually is going on there and what the company has, which is why I feel like it is so absolutely cheap and ridiculous here, trading around 35 to 45 cents Canadian. You want to buy companies like this when there's no volume. Here's what I end up doing. What I end up doing when I want to take positions in stuff like this or the sub 4 million market cap, I buy some every day and I do it at or above the offer price so I can get some stock. You can't get any stock. If you have any money like you want an actual position where it's going to be like 10 to 100 grand in something to make even a difference at all, you got to buy offers. Even if you're a smaller investor, it doesn't matter if you save 2 cents on a 40-cent stock. The key is if it's going to 4 or 40, you want to make sure you own it and you bought it at these times when everybody else is asleep at the wheel or scared, and just not active. I think that habit for me is what changed my life. A lot of it materialized in crypto, but the foundation of it was built in our very own mining stocks, buying in markets like this, loosening up when all of a sudden everything's looking rosy. Gold and silver are up. The miners are flying. I mean, I see these account swings in my portfolios, and it's too low right now. Just in general, it's a feel, it's a sense, it's a sixth sense that I could say. Even when I look at the data, that just backs up the fact that I'm looking and I'm saying this stuff is very, very cheap. Anyway, on Phenom, I think that it's just a matter of time before we're going to see, and it might be we could see something tomorrow, because they've been drilling at Carlin Deep looking for the next elephant gold discovery. Okay. They hit the feeder zone there and see you later. You've got the Smoke property, which I know that they just drilled. It sounded like with my last discussion with the company that they're really like cautiously trying to be cautious, but looking at some of this core, they're pumped. They're pumped up. So we'll see. You always have to have the assay labs confirm things that on the ground might kind of look good, that you think is different. But I like to hear those things from the companies I'm heavily invested in, like Phenom, that we're onto something. And I know we are. It doesn't even matter if it's now or if it takes another 3 to 6 months or whatever it is to drill more holes. You have Dave Matheson that's leading this charge in Nevada. What does he do? He finds gold. That's what this guy does. He's one of the best in the world. He might be the one who's found the most and had his hands on either solely or as part of a team, but very actively found the most gold in Nevada history. I think he probably, from more research that I've done over the years now, that's who we're betting on. And with a guy like that, you just need to give him some time and some funds, and he's going to find you a big gold deposit, and maybe 2, maybe 3. In addition to that, we have a vanadium asset that's growing. They added some additional assays that weren't even included in the PEA. There's $100 million grant on the table. And guess what? I happen to have some really interesting relationships in Washington, D.C., via some really close relationships that I've built over the last couple of years that may very well be able to help lobby us with the Department of Energy. There are professional lobbying firms being engaged at the highest level you can possibly think of, that if Phenom Resources has a chance at a $100 million grant, we're going to get it. Imagine the economic changes on a PEA of a vanadium asset with a $100 million check given to you. That's coming by October. It's not too far off, and we have a good shot at getting something like that, $50, $100 million. That's a big deal. There's a lot of catalysts on that thing. And then when the markets dictate, call it probably somewhere, we'll start thinking about this seriously towards the end of the year or certainly the first half of next year to spin out the vanadium asset. There's other stuff that's looking to be acquired. Phenom Resources is actually one of these deals that's on the offensive, which I love to see. I'm going to cut this less than 30 minutes here. I went too long anyway, but I hope some of that was helpful in terms of just giving a viewpoint to those of you that have been asking for it and waiting. As far as any of these individual stocks, we're going to do some Q&As and we can get into that. I know it starts with Bravada, and that thing is so cheap. It's just stupid. You know it. You don't need me to tell you that. It's at 3 freaking cents. It's so dumb. They have 1 million ounces of gold just at Wind Mountain and like 8 other projects. I don't care if the management has been mediocre in executing. That thing is money for the taking. Okay. And that's going to be a lot of the updates that I give. It's just a matter of, we only have so much cash. Which ones do we really load up on and start to buy more of, and which ones we don't? So that's it, guys. I'm going to end this here.